Hello everyone and welcome to the School of Candlestick Pattern Part 4. In today's session we're gonna talk about the dark cloud covers and the piercing patterns. Both of those are reversal patterns that are very good to know and to try to find them in your charts. So let's get started and see you there. So, the dark cloud covers and the piercing patterns. Those are what we call a dual candle pattern. That means they need two candles to form, and they are usually a reversal top and bottom patterns. The best place to see those patterns is, of course, as many other patterns is in the stock market. But because we talking forex here, we gonna have to tweak those patterns a little bit, and I will show you what I mean in a minute. So if we start with the dark cloud pattern, which we have here, as you see, ideally this pattern comes after a trending strong upwards market, and it closed on its highs with a strong bullish candle, and the day after, if it is a stock market we're talking about, this candle should maybe open somewhere up here, and at the end of the days it closed below the 50% range of the previous candles. If it closes deeper than that, it's even better, as deeper below the 50% range as better. In a downtrend market, we want to see the opposite. We want to see a trending down trend market, an open, a gap below, and a close above the middle of the previous candles, as you see here, and as higher, more higher, even better. So that are simply those two patterns, and they are very useful when you find them in the right place in the charts. And we're gonna go to a live chart later, and I will show you what I'm talking about. In this chart here, as you see, we have, this is a stock chart. That's why you see the gaps, and I did take a stock chart just to show you how it should look like, because once again this is a pattern that is for stock markets, and almost all the patterns that we trade in forex are stock market patterns. So as you see here, we have a strong uptrend, and at the top of it we got this dark cloud cover coming in this candle. Of course, we want to see also if this level is a good resistance level that will give us much more confidence that this is a reversal pattern. And as you see, we had a gap open, the market gapped up, opened it above the highs of the previous days, and traded a little bit higher, and then closed all the way down almost 80-90% below the body of the previous candle. That is a very good dark cloud cover pattern. And as you see, the day after and the week after, price start to heading down and reversed. For the piercing pattern, it is the opposite what we saw in dark cloud cover, and we have a downtrending market. We have a strong bearish candle here, and the day after, as you see, the market gapped down, opened it below the high at the lows of the previous day, traded all the way back down to here, and then pushed back up and closed above the 50% range of this body and almost about 80% of the previous candle, and start gapping up and trending higher. But in Forex we don't see lots of gap. Once a week we have them if they appear, so that's why we need to tweak it in Forex, and you have almost always the opening are as the same as the close. And let's go to live chart and let me show you what I mean. So guys, here we have a Forex chart, and the pair we're looking at is Aussie CAD on the daily. As you see here, this area here have been is where we have our last resistant level or last high, and if we just make a mark of this structure here, so when price start heading up to this level, we will surely be looking to see any bearish evidence at this level. And what we got here is this whole up move ended with another strong bullish candle that couldn't break the old highs, and the day after you see that we got this bearish candle that give us our dark cloud cover, yeah. And you see that what I was talking about, that in Forex we have the same open, we don't get gaps all the time, but the market start to trade it down and closed way below the 50% range of the previous candle, yeah. And the day after we just kept trading lower and lower back down here. One more thing to mention, that it happens very often that a dark cloud cover candle can be used as resistant, and as you see here, we have another test of this structure where the market couldn't break these highs, and we got this huge engulfing candle, and market start trending down now, yeah. So both engulfing candles and dark cloud covers can be used as resistant levels. And let me show you the piercing pattern also. As you see here, guys, the market is trending down in a very deep and steep move. We put this last low here, market did come down, got rejected, another retest, couldn't break below, and the third try here we got this piercing pattern at this candle here this day, and as you see from here the market start to trade to the upside. So that's another good example of how a piercing pattern should look like. Always look at them in a strong trends and near support and resistance, as I always say. Don't never ever use the candlestick patterns by themselves. You should always use them in combination with trend line, dynamic support, trend resistant, or horizontal horizontal support and resistance level. So guys, that was it for today. In the next episode we will talk about the stars, the morning star, the evening star, the doji star, and the shooting star. So to the next time, see you, bye bye.